Thank you for joining me once again. My name is Ola Ibiwoye of Commercial Property Club. Today, it's our podcast on air. And just like we always say, we share valuable knowledge here in Commercial Property Club. We bring vast knowledge, experienced experts, both players in the industries of commercial real estate, class asset apartments, warehouses, retail, medical buildings, as well as some other class asset too in the commercial real estate sector. We believe that knowledge is valuable when it comes to being an informed investors. And that's what we do here in the Commercial Property Club platform, with our media platform, such as our podcast and also our online providence of all informations that we share out there. We believe thought leadership is the holy grail when it comes to being a seasoned investor in commercial properties. Today is another day in which I have somebody very experienced, somebody that has really done it. Not only, as he said, he's done so many aspects of commercial real estate. Is bringing on board today some valuable experience. His name is Dylan Marma. He's a principal when it comes to Requity Group. This is a man that is an entrepreneur, operates first commercial real estate investment company in that sector. They serve high net worth investors by providing a platform that can be trusted with transparency, reporting, and also providing above average performance in their investments. They also operate large manufactured homes, communities, RV and cabin campgrounds. Also too, they are in multifamily apartments also too. Dylan has been in this sector for quite a bit. He's the principal in Requity Group, a vertically integrated real estate private equity company. He's been fully invested, he's doing it full time. He started the last 7 years, has been lead sponsors in several investment packages, over 150 million transaction, and that includes 750 multifamily door units, 2,000 lots of manufactured homes, that's mobile homes, RV campgrounds. He has been in transaction well over 2,500 units and 100 million in acquisition, asset under management, and his own operated in so many kinds of funds, syndications, as you may have it also too in the terms of all this deal. Dylan firmly believes that through careful selection of deals, attracting exceptional people, and utilization of several technological systems, there is advantage, there's risk mitigations, and there's good returns when it comes to real estate. He's done it. His company, he founded in 2020, and the purpose is to create reliable returns. We're going to hear from him today as we dive into the show fully. Without no delay, I present to you Dylan Marma. Dylan, you can go right ahead and say hello to my audience.
Yeah, thanks for having me, Ola. It's great to see you again. I know it's been a little while since we've connected, and appreciate you having me here on the show. Appreciate the introduction.
Awesome. We're glad to have you here today. And just like I rightly said in the beginning, we would value your experience. You've done it. There's no better time to share what you've been through, how it all comes together, and it's amazing. It's amazing. Your resume speaks of itself also too, and no doubt my audience is gonna, pick a lot of your experiences today, and we will hope you would be gracious enough to dive into so many dimensions of real estate, particularly the niche asset that you're focusing on right now. And So today's topic, my viewers, is how to create a profitable, vertically integrated commercial real estate investment. Dylan, you're not a novice when it comes to real estate investments. And the topic today, I want you to dive deep into that. And how did you, before we go in details, how did you start in commercial real estate?
Sure. So I got started in real estate. I must have started off dabbling in real estate about eight or so years ago, and initially got my first purchase in residential real estate, as most do, buying a single family rental home through a turnkey rental company. I was pretty much just working a job in the real estate field where I could learn as much as possible, started to invest whatever I could into buying, residential homes, and sort of had the goal of being able to eventually retire off a residential portfolio. And then I think it didn't take me too long before I looked around and said, well, this doesn't really excite me all that much. And I really want to put myself in a position to, build something, right? And I saw commercial real estate as an avenue where it just seemed a lot more exciting to be able to work on large projects, to be able to serve investors and serve, team members. And that, for me, was a lot of what drove me to look at this. As I said, this is a vehicle I think I would really enjoy spending the next 50 years, pursuing mastery in, because it gave me, sort of the intellectual stimulation that I seeked, in addition to the, being a really rewarding path to follow from a monetary perspective. And so I kind of caught the spark of interest, sunk my teeth in, surrounded myself with a lot of mentors, and sort of reaching out to people on LinkedIn and Facebook, and whoever I could get on the phone, I would just start picking their brains. And I took a lot of notes and really started to wrap my head around how this all worked inside and out. And sure enough, I ended up getting into my first deal after a year or so of studying, 21 units that I bought into with a couple partners as a joint venture. And then from there, I continued to learn and grow. And I think my knowledge started to speak for itself in the way I could communicate with others in the space. And I was fortunate to land a partnership with a few guys that had an existing portfolio, or they had some deals, multifamily deals that they were owning and managing in-house. And I said, hey, I could come in and help be the sweat equity to help us scale our portfolio, begin to bring in investors and communicate with them and asset manage and help us find more deals. And it was great because it was a small shop. So I got the opportunity to really, put on a bunch of different hats at once to really get a broad perspective on how everything worked, from property management to asset management to acquisitions and investor relations and so on. And then did that for a few years. Partners and I had a good experience, and then just hit a point where we realized we had different long-term goals. And at that point in time, started up the Requity Group. And 2.5 years later, roughly, we look back and that's where we are, coming up to 3 years now, actually. So it's been a good run thus far.
Awesome. It always has to start somewhere. Most especially when it comes to commercial real estate, it starts from where it is small, and it grows, and it takes consistency to stay within that growth pattern, which you've done now over the years. And I remember you and I crossed paths with V.D. Chopra, which is your mentor, my mentor, so I remember very well. What a great man he's become right now in terms of investment. Now, what does it mean to be vertically integrated in commercial real estate, particularly in your niche? What can you say about that?
Yeah, so vertically integrated, in the context I refer to most often, is just meaning that you are owners and operators, but not just operators in the sense that you manage a third-party management company, but that you actually own and operate a third-party management company in addition to wearing the other hats that come along with making the investment itself. So in our case, we have about 50 people that are full-time in our property management business, mostly are on the ground staff, frontline staff that are leading the charge with, pleasing the residents and guests each day and helping with the construction efforts and the improvement efforts that take place. So that's what it is. And if I were to, just give my 2 cents on why I like being vertically integrated and what that means for investment companies. What I like about it is that it gives us complete visibility into every single thing that takes place, right? I know every one of our managers by name, and we have a general sense at all times on all the chaos that is taking place behind the scenes. Which is a great thing. And then on the flip side, the downside is that it's a lot more work, and it definitely is not an easy business to scale and to grow. But in my view, the pros outweigh the cons.
Awesome. So it's in-house. That's what vertically integrated just means. And there's an aspect of the business that, normally you'd have contracted out, but you bring it in-house. And that helps the growth of the company. So tell us about your niche in commercial real estate. I know you and I cross paths in the multifamily niche. But I know you have you're doing something new right now. So tell us about it.
Yeah, so started off with multifamily and still do occasional multifamily deals, but definitely have been primarily focused on mobile home communities as well as RV campgrounds. Majority of our portfolio is our RV campgrounds at this point in time. So in terms of traditional mobile home communities, I think those are a little bit more widely understood at this point. But what's unique about those versus traditional multifamily is the land and the homes are separated. So oftentimes you either don't own the homes, or if you own the homes, you have the opportunity to sell the homes off to residents of your community, which is great from an owner-operator perspective, because a lot of the biggest headaches we have in traditional apartments are getting those phone calls about, all of the issues with the deferred maintenance falling apart, roofs needing replaced, floors needing replaced, and constant deterioration of the physical structures themselves. So by selling off the homes, you have the opportunity to, people have a sense of ownership when they own their own home. They're going to treat it better. They're going to make it nice, and they're going to respect the community a little bit more, at least we find. And then two, they're purchasing the home as a long-term play. It's usually a 15-year plus average stay in a home. So it's a very sticky resident base, which for long-term investors, we like that. We like a sticky resident base and minimal capex, needs, right? So it makes for a really great investment. Then on the flip side, you have RV campgrounds, which are very similar, and they often get bucketed together. A lot of the brokerages or the investors kind of operate in both asset types because of the similarities, but they also are very different at the same time. RV campgrounds or RV parks or RV resorts, depending on the quality of the place, can represent a variety of different use cases. But generally, you find that these have a little bit more of a hospitality component to them, where people are not there to live there. They're often there to either stay there for utility functions, like say traveling nurses or contractors that were using the campground for a period of months, or they're there for vacation purposes, where they're in and out for a weekend, or they're there as more of a seasonal guest, which is someone that's going there for the purpose of staying for the entire season, or maybe for many years in a row, to be able to build memories with their families. And they're coming there on the weekends, leaving their camper there, and that sort of thing. So you have a variety of different reasons that people RV, but it's a really neat business, fun business, and it's got a lot of growth to it. I think the compound annual growth rate has been really significant, especially with the COVID sort of accelerated it. But we still have really good future projections on
Okay.
the amount of RV sales taking place and the amount of people that are getting into RVing. So I just think it's a good time to be in the industry.
Okay. Wow. Wow. RVs and mobile homes. Those are quite an asset that, sometimes a little bit hard to understand, but I'm glad you were able to break it down as it is. So many flexibilities when it comes to mobile homes and RV parks.
Yep.
Awesome. And talking about that aspect of your niche, tell us about the benefits of being vertically integrated in this your class asset. What would you say these are the benefits that has been very vivid when it comes to mobile homes and RV parks, when it comes to
Sure. So this asset class is definitely a little bit more of the Wild West in some ways, where it's just not as institutionalized, and you don't have these, the gray stars of the world running around offering to manage, your properties, and you don't have these highly reputable management firms all the time. There definitely are some really good, solid boutique management companies that are on the up and up, but we're all still somewhat figuring it out at the same time, right? There's a lot of growth going on, a lot of new technologies, a lot of new strategies, and we're all figuring out, what does the institutionalized, I don't even know if I like that word, but what is sort of like the next professional step of, management entail, right? And I think that's a thing I think it's a good thing for the guests of the communities too, because they're getting somewhat of a more congruent experience, more professional service, and that aspect of things. But when you're vertically integrated, I think it allows you to move quicker on new technologies, new ideas, to be able to kind of control the process and what the experience is like. And I think there's a lot of benefits to that in this space. Okay,
great. So there's been a lot of incorporation of even the demography that you serve in terms of your vertically integrated aspect of things. It's really helped your demography so well.
And you get culture, right? You get to think about who do you want to represent you, right? What are your core values, and do the people that are on site representing, you and the company to the different guests that are there, right? Do they represent what you want, right? And I think there's some value in that too, right?
Yeah, absolutely. Now, when it comes to your group, the Requity Group, how do you guys work with investors, sophisticated or maybe your accredited investors? However fashion they might come on board, how do you guys would typically work with them?
So we largely work with accredited investors. We have worked with a few groups that have different forms of capital, but it's primarily accredited investors, and we are working with them on the basis of either a fund or individual deal offering that we'll share with them, and then they can invest alongside us, similar to like a standard syndication model, with usually giving a preferred return to them, returning their capital, and having a profit share after that. That is our reward for overseeing the successful execution of the business plan. But yeah, generally we work with them usually somewhere around $100,000 or more. The known check size, and they'll invest into a project, or they'll invest into a group of projects that we're actively pursuing.
Yeah, awesome. And knowing who you are dealing, and knowing what you've done over the years is also too. I'm not surprised as regards to how well you work with your investors, and that's going to inform my next questions. That what kind of value and advantage does Requity Group bring to the table for investors that makes you guys unique, that would usually set you guys apart from every other group out there?
Yeah, I think the thing that I probably hear most often is just how hands-on we are in each aspect of what we do, right? We are we are an operations driven company, and we are actively, I mean, every day we're spending time, I'm spending time overseeing operations and the execution of the business plan. Trust me, we're far from being perfect, right? And operations is a tough business to be in, and there's constant firefighting and unexpected twists and turns that can arise from it. But I think that our understanding of what the challenges are and our ability to act quickly to handle them and to improve properties and to create good experiences, I think is what really, I would say, separates us. If I had to tout one strength, we invested heavily into our operations team early, and all of our early hires were all related to operations, and we really built that to be our strong suit. And that's what I'd say it still is. I mean, we do a lot of off-market sourcing. The vast majority of our deals, 90% of our deals were purchased off-market. So sourcing could be a strong suit because we do a lot of cold calling. We've got a wide breadth of different people we're sourcing deals from, and that definitely helps a lot as a strong suit. And then we do monthly reporting, and we also do video updates periodically with investors too, to share with them kind of behind the scenes what's going on at each property. So really try to give investors a really good pulse on what's going on at all times. So we try to have a well-balanced the different pillars of acquisitions, operations, and investor relations, right? So
yeah, awesome. And just like you've rightly alluded to, what you guys bring to the table, which is different from others out there, which is value in terms of what you talked about right now. Are there some specific markets that you guys are focused on, or you just would go anywhere, being vertically integrated?
We are mainly focused on North Carolina as our biggest state, followed secondly by Tennessee. But we have properties throughout mostly the Southeast right now, and little bit inching into the Midwest. And we are open, if the property is big enough, we're open to going out of our existing footprint, but we sort of are strategically just taking it one property at a time and trying to see what makes the most sense, fits the mold for us. But Southeast is our bread and butter. That's definitely where we're most competitive.
Okay, Southeast, awesome. I said something earlier when I said mobile homes and RV parks sometimes is an asset that a lot of people do not understand very well. When it comes to mobile home parks, RV parks as investments, what makes them a preferred investment for investors?
Well, I think there's a few things. I think one, the CapEx is lower, which means that if you're going to hold a property over time, you have less really large expenses that arise that could cause issues with your cash management, say, right? So you have lower recurring CapEx, which over time leads to more take-home money or take-home cash flow. And the yields, as a result of that, and a result of just higher cap rates on average, you generally have better yields. For us, we generally have been able to pay out a preferred return within pretty reasonable time, if not from right out the gates. We've been able to pay it out very quickly, 7 to 8%, depending on the deal, and consistently, and having the ability to generate high cash flow for our investors in a world where it's not as easy to do that in a lot of other areas in the real estate world right now. I think goes a long way. And then you have the opportunity. Lastly, I'd say because of the nature of it, it's really it's a game of consolidation in some ways, right? We're able to improve the value of our individual assets through acquiring additional assets, because as we build an operating company and we build scale, then the portfolio that we have then becomes more inherently interesting to institutional investors and those of the like, because they can now write a bigger check and buy more in one swing. So that has a lot to do with it too, right? We're generally longer term holders, but we are all about value creation over the long run, and building the portfolio, I think, creates a ton of value.
Okay. Wow. So the value it brings to the table is you get better returns than most class assets right now.
I think so. I think certainly better than a lot of traditional multifamily, but I use the word better cautiously because everyone has a different definition of what that means and the risks that are associated with it. So it is higher yielding, and the upside can still be there too if you do it right. Okay,
awesome. And my next question is TRG is your management company, which you're integrated with the whole setup of your system in terms of your investment group, TRG Living Management Company. Your house property management, how important is that for your investment portfolios? How important is TRG?
I mean, yeah, that's the majority of our company right now, and definitely a crucial part of our business plan. I think one thing we try to do as we're looking at new opportunities is we look at it from sort of a bottom-up lens, where we're looking at it first through the operational lens, right? Knowing that we have a pretty good pulse now on how much our trash bills are, how much our landscaping bills are on average, how much our payroll tends to be, and how much our insurance is, and so on, right? Looking at it from the property management side first, and then kind of backing into how does that look from in our acquisitions model, and kind of price accordingly. So instead of having to try to consult with third-party managers, because I've done this before, where you consult with a third-party manager and then they tell you one thing, maybe they tell you what you want to hear, and then in fact, we're not operating anywhere near those numbers that we set out to operate towards, right? So I think it gives us a little bit of ability to have more conviction behind how we're going to be able to operate the deal once we're in there.
Awesome. I'm glad you alluded to the fact that having such an integrated company does help to see exactly how things are. Awesome. Now, how can newbies, new people that are viewing your life right now, get into the mobile home and RV investment business? With your experience, what can you say? These are the things that they can do that can help them be successful.
Yeah, so I would say that it all depends on your goals, how much capital you have to start off, and that sort of thing. Mobile home communities tend to be a little bit easier to manage, as you can find ones that are fairly lower maintenance, and you can start with smaller sizes and still have it do cash flow for you and not take up too much of your time. So I think going cold calling or talking to brokers and trying to find some quality mobile home communities could make sense. And then on the RV side, I try to caution against going too small on RV campgrounds, because you really want to get scale to make to get the operational efficiencies that come out of it. I think it's better for the investors, for the guests, and for most involved to target something a little bit larger. So I recommend generally starting off partnering, with someone, or trying to, just ensure that you really study up on it and get comfortable with the space, so that you have a good clear goals, and then trying to go for scale. Personally, I'm a believer that with the RV campgrounds, you really want to be able to build scale.
Okay, awesome. Thank you for that. So invariably, when you look at things, what are the pros and cons when it comes to getting into that space? That's for you.
Yeah. Pros and cons. Well, I'll start with the cons. You have private utilities are much more prevalent here. Private utilities, they might look good on paper because you got lower operating expenses, but you can have the hidden capital expenditures that come along with them. I know so much more about septic tanks and wastewater treatment plants and different wells and different forms of private utilities that I never had any idea about, prior to starting to get more into this space. So definitely that's a nuance that you have to become familiar with. Traditional mobile homes have the pretty significant storm risk because if there is a tornado or a hurricane and your homes get hit, it can really put you in a tough spot, put you in a little bit of bind depending on the market you're in. Insurance is generally not as easy. I'm hearing in Florida, some providers are pulling out completely, and it's getting very difficult to get good, decent insurance on mobile homes. So that RVs are a little bit different. They're much more storm resistant because they can always pull out. They're on wheels. They can leave if there's a hurricane coming and come back after the fact. You generally are in a better position to be on the coast, in my view, in an RV. Campgrounds. Then you have additional risks. You have different legal risks depending on what it is. I think with traditional mobile homes, I think you always run the risk of rent control or different sorts of changes in legislators that could put you at risk of the future valuations of it. RVs are similar but different in terms of the risks, but there's always different risks that are involved with just changes in the way different states and counties, the rules that they set up to run these places. Increased utilities is a risk for increased utility costs right now on the RV campgrounds. Utilities and payroll are the two line items that are going up pretty significantly across the board. So, I think just keeping an eye on that, that's definitely a risk that we need to keep an eye on. Mobile homes are pretty sticky guest based, but RV, you really got to be an active operator because you want to keep your occupancy high. And there could always be a risk of seeing a decrease in demand if you're not creating good experiences, or you have more supply entering the market. The mobile home communities, I don't see as much of a risk of new supply, but certain areas of the country maybe, but generally there's a huge undersupply of that. RVs, I think there's always a possibility if you're in a great location, they seem a little easier to get approved, so you could have some more new supply risk on that front. Operational risk is always prevalent on both, especially with the lack of as many options on third-party management. So those are just a few that come to mind at the gates. Awesome.
Ton of valuable information you've shared with us today with a unique class asset like the mobile homes and the RV parks today. We are rounding up the show right now, and is there anything you would also like to want to share with my viewers in terms of before we round up the show? Anything else you want to add also to anything we're not talking about today? What I would need to talk about?
Nothing that comes to mind at the gates. Definitely think that both these asset classes are worth looking into. So I encourage everyone to check it out. If you want to check out our website or get on our newsletter, you can visit therequitygroup.com. And we try to share updates on deals we're doing. We also post a bunch of videos where we teach on different topics, so we can kind of give you some high level information. So happy to, keep adding value.
Awesome. Dylan, it's been wonderful. Today's show has been wonderful. Like Dylan rightly said, hey, Commercial Property Club, today's edition has been a ton of value for everybody. Like I said, or like you rightly said, you can visit them on www.therequitygroup.com and check them out. Ton of information on their website also too. And for those people out there that are interested in that particular class asset in terms of high net worth people, you can check them out also too on their website. I can say this is a wonderful group that you can actually build a relationship with. Awesome. Dylan, thank you for joining us today here on Commercial Property Club, our podcast. Oftentimes, the time is just too short to share the ton of knowledge that people like you have. That's why we always said you're welcome back anytime on our show to even dive deeper into your niche asset. Thank you so much, Dylan, Marma. All right. Enjoy a super day. Like we said, here in Commercial Property Club, podcast, we would always make sure we propagate knowledge in the commercial real estate space. If you're informed, you're better and likely to invest better. All right. Thank you very much. Have a good one, everybody.